ANZ has posted a $7.4 billion cash profit for the financial year, up 14% year on year. The bank also returned a record result for revenue, up 13% to $21 billion. The result was driven by strong growth in ANZ's institutional banking division. However, the bank saw some pain in its retail business, which contracted by 8% year on year. ANZ's net interest margin plunged by 10 basis points over the half, driven by strong competition in the mortgage lending space. The final NIM came into 1.7%, which was short of analyst expectations. ANZ says it will close the year with $245 million in extra provisions to guard against potential credit losses amid challenging economic conditions. The final dividend, it came in at 94 cents per share. Joining me now is ANZ Chief Executive Shayne Elliott. Shayne, thanks for your time today. Record profit for ANZ, but the shares are down sharply. So investors clearly expecting a lot more, but what more could you have done? Because it looks like a pretty good result.
Oh, no, I'm really pleased with the result. This is a record for ANZ in our history in terms of both revenue but also profit. So I think we did the very, very best we could with the businesses we've got. Hey, the market's the market. It'll go up and down. Time will tell. We've got to get out there and tell our story now about the real drivers, the real strategic advantages that we have as an organisation, and we're going to start that from tomorrow.
There's a suggestion your profit was lower because you offered customers cheaper rates on home loans to try and boost your market share. Look, how competitive is the mortgage market right now?
Mortgages is always a competitive business. Well, it certainly has been for the last 5 or 6 years, and I imagine it's going to stay like that. And, you know, organisations like us have two choices. You either put your head down and you go for it, and you get out there and you sharpen your prices and you sharpen your costs and you put the very best forward that you can to do the right thing for customers, particularly when times are tough like they are, or you step back and walk away. We're not ones for walking away. We've leaned in and, you know, we've been growing share consistently, but we're doing that also with a mind to making sure that we can generate fair and decent returns for our shareholders, and I'm confident that we got that balance right.
Yeah, how successful has that strategy been over the past few years? How much market share have you gained in the mortgage sector?
So mortgage is a little bit different to most products, and I guess most of our customers would understand that. You know, we're not a retail consumer good. Not all share is valuable. Not all share is the same out there. We've got to make sure that we're lending to the right people at the right time responsibly, and customers that we feel we can add value to over a long period of time. So our market share's gone up and down over that period. Right now it's going up a little bit. That's not necessarily a bad thing, but we don't sit there and target market share in and of itself. We target getting out there, lending to the right people with a view on the long term and making sure we can retain those customers for a period of time and generate a fair return in doing so. And really, more importantly than that, we want to broaden the relationship. We don't want to be just a commodity provider of home loans like many of our peer group. We want to be out there helping people right throughout their entire life and improve their financial well-being. And the home loans is just an important, but just one part of that long-term relationship.
Have you been surprised by how few home loan customers in Australia are in hardship? I think you mentioned this morning roughly 2,000. Look, with interest rates where they are, were you expecting that number to be a little bit higher?
We didn't really have a forecast on it, but I can tell you, yes, it does feel a little bit surprising, doesn't it? 1 million homeowners or home loans at ANZ and only 2,000 have reached out for help. Does seem a little bit low, but I think the real reason is twofold. One is that actually, sadly, I think home loans have become the preserve of the rich and the wealthy and the better off, the affluent, pick a name. It's actually much harder to get a home loan in Australia than at any time in the last 30 years for a whole bunch of reasons to do with regulation, responsible lending and all sorts of other good things that the market has put together or the regulators have imposed on us, but it comes at a real cost. So it means that fewer people get into harm's way, but it also means that fewer people get the opportunity at owning a home who might otherwise have had that opportunity. So I think that's one thing. And then the second reason is actually, remember, we've just come through COVID. And what happened in COVID is that there was a big cash splash. And so a lot of people, including people with home loans, ended up with a lot more savings than they've traditionally had. And what we've seen is record levels of savings. And that is the ultimate buffer. And so that means people have been able to muddle through, even though they're struggling with cost of living and higher interest rates. And many people are. They've been able to manage through with their savings and making changes to their household budget. So, yes, it's surprising it's low. That's a good thing, by the way, But when you think it through, it's probably not too surprising.
And property prices in Australia, according to REA Group, hit a fresh peak in October. So how large is the average home loan you're now writing in Australia?
So the average home loan in Australia is, from memory, a little over $400,000. So again, probably a little bit lower than people think. But remember, not everybody, in fact, most people don't borrow to their maximum capacity. So not everybody, I know we like to talk about people with the $1 million home loans, et cetera, but that's pretty rare, actually. Most people have relatively modest home loans. And the other thing that we're seeing, of course, is that a lot of people who take out a home loan also have really high offset balances. So at ANZ, on average, somebody borrows $100, they're putting 10 to 14 cents of that in an offset account for a rainy day as well. So people are, again, being pretty prudent with the amount that they borrow. Not all customers are the same.
Just looking at Australia's economy, what pressures do you see occurring over the next 12 months with inflation now forecast to stay higher for longer than anticipated?
So like the rest of the world, the economy is in a delicate position. We are suffering from high cost of living pressures for all sorts of reasons, many of which are not in control or in our control here in Australia, and we've talked about the Treasurer has quite rightly talked about the impact of the oil price and energy prices, for example. So those are causing all sorts of stresses. So that is putting pressure on people's household budgets, and that's forcing the Reserve Bank to increase interest rates. So where we're seeing stress across the economy is anybody who's got a little bit more debt than they should have, anybody who's running a business where they don't have pricing power, so they can't pass on those costs to somebody else. That's why we're seeing stress in areas like the construction sector. So those are the areas that are a little bit more prone to risk. And of course, who are those people? Well, unsurprisingly, some first home buyers, because they're the people who've, stretched a little bit more to get a little bit more debt than they may have otherwise liked. Certain kinds of businesses out there that don't have pricing power. And one of the ones that I called out in our results today, and this is a global area of concern, is office property. So commercial real estate. Why? Well, they're suffering not only because they've got to pay high interest if they've borrowed, they're also suffering from the whole change around working from home, and who knows where that's going to end up in terms of total demand for people being in an office. And in the longer term, they're also suffering, or many are suffering, from this big transitional shift to greener buildings. So not all buildings can make that transition. So that's an area that we're also alert to, not alarmed at this point, but alert to and watching very carefully.
Well, Shayne Elliott, Chief Executive at ANZ Bank, thanks so much for your time today.
Thank you.